Hey trader, Steven here with TradeSpan.com. It is Friday, August the 5th. Let's take a look at the market real quick, and then let's take a look at some top ETFs of the week. So I'm going to start with the NASDAQ. I'm recording this right before the market opens, and the futures are down about 1.5%, which is honestly kind of not a big deal. It's not a big deal until it becomes a big deal. And the reason I say that is because when you're trying to get out of here, you're going to have some kind of some volatile days. Let's just put it that way. And I want to talk about this back here, like when the NASDAQ finally moved above the 50-day moving average. Here, let me clean this up. The orange line right there, it came up and then it sold off 3 days, and it sold off really, really hard. But it found support at the 20 and it found support at the 50. And a lot of times this happens when a rally starts getting going, especially after an ugly market. It'll try to shake you out once, it'll try to shake you out twice. Really thinking all the bears are coming in, and then it'll keep going. So try to give the market a little bit of breathing room. And the reason I say that is because these kinds of rallies, they can get steep and they can go further than you thought. Now, I say that we don't know which way the market's going to go. I don't know if the market's going to roll over from here. I don't know if the market's going to keep going. The only thing I'm saying is if it keeps going, you definitely want to be in. So I think it pays to give the market a little bit more breathing room and not be so half glass, glass half empty. So that's all I'm saying, and that's the way I'm looking at it, because it's clearing hurdles, right? It cleared the 50, and then it retested that. It cleared this, retested that. It's quite a bit above all the major moving averages right now. Like it's 6% above the 20-day moving average. So pullbacks are reasonable and necessary, and we also could get into some sideways. So just keep in mind that anything can happen, and don't pay attention to where your stops are, and don't try to overanalyze it. Just have your plan, right? Put your trade on, and then put your stops in, and then just let it run. So let's look at the top ETFs of the week right here. You got a lot of ARK in there, which is good. I like to see ARK in the top list. A couple Fridays ago, ARK was the leader, and right there. So right here, we're kind of in this like first stage bottoming rectangle pattern, and a lot of the ARK ETFs were leading, and this was kind of right when it was breaking out above the 50-day moving average. And remember, I talked about that shakeout. And I was talking about like, hey, this is a good place to swing the bat. And then it sold off, and it sold off hard, and it came right back. So you kind of got that shakeout, probably got stopped out, and then boom. And then it comes right back. So the market has a way of frustrating you. But I think risk reward in the ARK ETFs are at a good place. I'd probably, let's see if the market pulls back a little bit deeper for a few days and kind of go from there. Maybe this ARK ARKF pulls back within the range. So I'm in the camp of today, as of Friday, like let's see if the market's going to sell off a little bit, because it's been really, really strong. When I say sell off, maybe 2-3 days, kind of see where it finds support. So if this really comes back into the, I'm going to say between $18 and $19 range, it's getting kind of interesting. And then I'll see if at that point in time, I'll see if the market firms up around the moving averages. That might be a good entry. But when we're in this kind of market, you really kind of have to pay attention day by day. And if you have an opinion on the market one day, just have your stops in place, but be willing to adjust. So right here, I'm looking at this, and I'm saying, hey, it's leading. This ETF and all the ARK ETFs were up 11, 12, 14%. But they're really still in this sideways consolidation. Now I'm looking at ARKK. You can see right there, hasn't broke out yet. So out of all the ETFs in the ARK, I would say the FinTech one is the strongest. So when you're not sure which one to buy, try to nab the strongest, because it can give you that extra 3, 4, 7%, whatever the case is, just due to the nature. So, and that is backed by the Wisdom Tree Cloud ETF, WCLD. You can see that's in the top ETFs of the week, up 10%. That's Monday through Thursday. And you can see this is also trying to break out right here. So you have a lot of the aggressive stuff like ARK, like cloud computing, that is really kind of putting in a bottoming and is really trying to get out of here. So let's say if the market sells off, let's just throw a scenario out. If the market sells off for a few days, let's say it sells off today, Monday, Tuesday, comes back in here, and then re-breaks that, that's definitely where you want to put some money to work, in my opinion, or that's where I will put money to work. Everybody makes their own decisions, full disclosure, but if you get another shakeout and then a re-break, you can't let this market, in my opinion, take off without you. So just kind of keep that in mind. You know, if you get a re-break, a pullback and a re-break, that's incredibly bullish. Always keep in mind, failure to fail equals strength. So if something tries to sell off and just it stops, it doesn't sell off that much further and it comes right back, then to me that's showing strength. Something else you have that's interesting is this XBI. This is I believe, an equal weight biotech ETF versus the iShares. You got a pretty nice bull flag going on. So from the looks of it, and we'll kind of blow this up and look at the weekly chart. You know, this peaked with all the ARK ETFs in January, late January of 2021. Chart looks like crap. It does. But so does everything else that's aggressive growth, right? Look at any clean energy, any cannabis, you know, any crypto, any ARK, anything of that nature, of that sort of aggressive growth. They all have peaked in January of 2021 and the charts look bad. But this one, it broke above the 50-day moving average quite some time ago. So I would even say this one, even though it's not up as much as the other ARK ETFs, this one is a little stronger. And then you have kind of this little bull flag breakout. So this could pull back to kind of the test zone, which could be around, I don't know, $83, $84. That could be a good entry. I mean, it was up 5%, 5.5% yesterday in ETF. So there's definitely, and I've seen money flow in to a lot of healthcare related stocks, everything from biotech to healthcare staffing. So there's something there, in my opinion, over the last month where this could be a long-term theme. Doesn't mean they're all going up, but you have a really good looking ETF that broke out of the bottoming pattern, broke out of the downtrend, broke of this downtrend. Right, you can draw it wherever you want. It broke out, and then it broke out of a little bull flag, and is about to kind of test that 200-day moving average. So if this kind of pulls back and does a retest of that breakout zone, in my opinion, that could be a good entry with just a stop, you know, under that bar right there. So you always got to be like, okay, I'm going to try to get it as close to this entry as possible. For this to work, it should not go under this bar, right? Or else it's just going to roll over and fail. So as always, you know, make your own decisions, do your own homework, really just trying to put ideas in front of you, but always use stop losses. If the market does roll back over, we definitely do not want to hope and pray, and I'm not going to let, you know, an ETF or a trade like this, if I get in right here, I'm not going to let it fall all the way back down to 62. That's catastrophic, okay? Use hard stops, sell first, ask questions later. I hope this was helpful. Have a great weekend.